Hey guys, welcome back to another video. It's crazy that it is already the end of the week, right? Because it seems like every week is passing by faster and faster. Anyway, at the end of every week, we take a look at what is going on in the freight market, and we take a look at what happened last week and what we can expect the following week. If you're new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market as well as freight market analysis. So if this is a topic that interests you, feel free to subscribe down below and join our amazing community. All right, I'm not going to make a whole long introduction here. We're going to get right into the numbers. But before we do, quick announcement or reminder. This Sunday at 4:30 p.m. Eastern, I'm doing another live question and answer video on the trucking industry and the freight market. So if you're interested in chatting about the industry and how the current situation is kicking all of our butts, you know where to find me. All right, let's get into the numbers. Ready? Let's go. Okay, let's start with some good news. The good news is that we are all on a path of professional growth. We're building resilience, we're gaining perspective, and we are getting creative to figure out how to stay afloat in this messy market. The bad news is that we will continue this journey of professional self-improvement for a little while longer. So let's take a look into the reality of today's situation. Now, as a reminder, all of these charts will be attached down below, but we are starting with the outbound tender volumes versus outbound tender rejections. I'm not going to repeat what those are because I have in every single video on Friday, but if you have any questions, you can either email me or leave a comment and I will get back to you. In terms of the general freight volume, the blue line, we can see that around July 4th until July 9th, of course, the volumes went down. Here are the dates just so you guys can see. And since then, they have climbed back up and have remained more or less stable over the past few days. Now, the same cannot be said about the outbound tender rejection, which is the white line right here. As we can see, it kind of peaked, then fell because of the volume, because of the July 4th holiday. And since then, it really has not recovered. Only since the 18th did it start kind of going up, but barely. And unfortunately, currently, the tender rejection rate is at 2.9, which means that 2.9% of the general loads are actually ending up on the spot market. This is not a good sign, unfortunately, and this is the first time in a while that we're below that 3% mark. So not exciting at all. All right, now let's take a look at the NTIL. As a reminder, the NTIL is based on dry van data, and it's basically the spot market rate less fuel surcharge. And we can see that since around, let's see, when was it? Since around July 7th or so, we have been stepping down, and currently the spot market rate based on dry van data without fuel surcharge is $1.64. How much more do contract rates pay than the spot market? And we can see here we do have a little bit more positive news because the gap has been closing. Now contract rates are paying 65 cents more than the spot market. So that is good. The gap is closing. It's no surprise. Contracts are getting renegotiated, and they get renegotiated more and more often because shippers are trying to take advantage of the current crazy market. All right, now let's take a look at diesel prices, and unfortunately, no good news here either. We can see that diesel prices have been kind of climbing up. They actually have been climbing up since the 10th. It's just that they had a temporary slowdown and they continue to climb up. Currently, the average price per gallon is $3.90 per gallon. Now, if we take a look at the diesel map, we can see that more and more states or market areas are becoming green, which means these are the places where diesel prices are increasing at the moment. Red means a decrease. So yeah, unfortunately, I don't have good news for diesel prices either this week. Now let's take a look at capacity. What is going on with capacity? How many carriers are entering? How many carriers are leaving the market? Basically, what's going on? I started tracking this data back in April of 2023. This is data that I get from the FMCSA directly. So we can see the red line is involuntary revocations, green is the new carriers, blue is the voluntary revocations, and the yellow line is reinstatements. But what's most important is actually the net change in carrier population, which takes into account how many new carriers came in and how many left. And we are left with the net change in carrier population. Now, unfortunately, since I started tracking this data, we have the least amount of carriers lost since the beginning of April of 2023. We lost only 50 carriers as of last week. It's not as of this week, it's last week. So yeah, carrier population numbers are deplorable too. So that means that we have basically a crap storm right now. All right, now let's take a look at more granular data, starting with flatbeds. And we're gonna start with the flatbed spot loads. These are charts that I get from FTR, these charts, right? FTR Intel. So what do we see here? Well, what we are concerned about is the black dotted line, which shows us the 5-year average, as well as the blue bar graph, which shows us where we are currently. The other lines are the previous years. We're looking at spot volumes, and we can see that last week volumes did increase. No surprise there, nothing great is going on. It's just that the week before was 4th of July, so volumes, of course, crashed around that holiday. So now there was a small recovery. The good news, again, I keep saying this, is that it looks like we are following the 5-year pattern more or less, but unfortunately, it's way below the 5-year pattern, right? We should have more loads than we do right now. So what about the spot rates? Again, a chart by FTR. Well, we can see that there was actually a decrease in spot rates for flatbeds, which again is normal if we look at the 5-year average, but we can see that we have been trending above that 5-year average for a while for flatbeds, and now we are below it for 5 weeks in a row, unfortunately. Trust me, I feel it as well. It's painful. Finally, we have this market map by the DAT or DAT load board. People pronounce it differently. And basically it shows us capacity to load ratio, right? So this is based on the previous business day. And as a reminder, we're talking about flatbeds. The redder an area, the bigger the load to truck ratio, meaning that there are more loads than there is equipment available to transport those loads, basically more negotiating power. The bluer an area, it's the opposite, right? Way more trucks than there are loads, no negotiating power. So for flatbeds, we can see that the West Coast, it's pretty tight capacity. There are way more loads than there are trucks, but the thing is, for a good rate, you do need to stick in the West Coast. I keep saying that. In terms of the South, it looks like the market is deteriorating. So it used to be very red throughout, but now we see blue points, we see orange points, we see yellow points. So basically, yeah, the flatbed market is definitely deteriorating, and I'm sure all of us flatbed operators and flatbed dispatchers and carriers, we are feeling the pressure. Okay, now let's take a look at what's going on with reefers, starting with the spot market. Now, with reefers, we can see that volumes, they did increase from last week. They actually increased for all equipment types. Again, it's nothing to be super excited about. This is because the week before last was July 4th and volumes tend to crash around that time. But again, the good news is we are following that 5-year average, which is awesome. We are way below it, but hey, at least we're following it. Now let's take a look at reefer spot rates. Reefer spot rates have been declining for the past 3 weeks, unfortunately. But again, I'm going to say this, we are following the 5-year pattern. Below it, but we're following it. So we're hoping, or I'm hoping, that we're going to see the rates go up a little bit in a couple of weeks here, not a couple, a few weeks here. Here's hoping. All right, let's take a look at what's going on in the general freight market for reefers, starting with volumes. As a reminder, the color shows us how volumes changed from last week. We're not talking about the spot market here. We're talking about the general freight market for reefers. Blue means volumes increased from last week. Red is the opposite, Gray means there was no change. And the height of an area shows us how much general volume there is currently. So we can see that for reefers, Southern California experienced an increase. Utah, we have Texas, we have some portions of the Midwest, especially Indiana, Michigan, Illinois, and we have Florida as well. Volumes increased out of Florida. But in general, if we look at the big picture, the map is pretty much gray. There's not much happening. Volumes are increasing in random markets pretty much. So I keep saying this, you have to be strategic at this point. Now, what about the rejection rate? So for reefers, here's the rejection rates. Works in the same way. We can see rejections dropped in Southern California. They increased in Washington, Missouri, Houston area, New Jersey, Massachusetts doesn't count because it's flat, but the Midwest in general, the rejection rates decreased and everything else is very, very gray. So let's take a look at what the spot market is showing us. Again, this is the DAT map for reefers. Red means that there are more loads than there are trucks, good area. Blue means the opposite. What was surprising to me is I don't understand what happened. I'm hoping this is just a glitch. I don't know what this is. But in general, we can see California is still a tight market, Idaho, portions of Oregon, Washington, Arkansas, Michigan, and then we have no idea what's going on here. Let's take a look at where you have to go next week in order to grab those relatively better opportunities. And as a reminder, what we are looking at, we're looking for a place that is as blue, dark blue as possible, because that means higher tender rejection rates, and as elevated as possible, because that means that there are more loads, there's more volume. And currently we can see Idaho, Washington is a very interesting area right now. California is kind of light blue, but still opportunities here. Texas, maybe some places in Missouri, Arkansas, Mississippi, but they're pretty flat. There's not a ton of volume, even though there's a lot of rejection. Nebraska, Iowa, South Dakota. Yeah, that's pretty much it. Told you. You have to be strategic with a reefer right now. And the hardest part is that you're not always going to find lanes going from a place like Texas to Washington and back again, right? Sometimes you have to zigzag based on what is available. But yeah, currently I would say Texas, Idaho, Washington, California. Maybe some portions of the Midwest is where the reefer is going to have relatively better luck. All right, finally, let's talk about dry vans, starting with the spot volumes. Again, no surprise here, increased from the prior week, and this is because of July 4th. So yeah, nothing surprising here. Let's take a look at rates. Well, rates are very similar to reefer rates. They have been declining steadily for the third week in a row, but they are following the 5-year pattern. So hopefully there's going to be a nice increase here, and of course towards the end of the year. For those of you who don't know, I'm filming on my phone, so every few seconds I have to pause it because someone's calling me. It's so annoying. Anyway, yes, 5-year pattern, we're below it, but we are following it for the dry van. Let's take a look at what's going on in the general freight market, starting with volumes. As a reminder, red means there was a decrease in volume from last week. Blue is the opposite, and the height is general volume. And for dry vans, we can see that volumes pretty much crashed across the board over the past week, unfortunately. And those places that are blue, with the exception of Michigan right here, they have very low general volume. Yeah, not great, sadly, especially keeping in mind that capacity is not really decreasing as of last week. So yeah, not great. Let's take a look at rejections. For rejections, it's getting a little bit better, but I have a feeling this has nothing to do with capacity right now. It has everything to do with the fact that contract carriers are feeling the pressures of the current market, especially considering that shippers are renegotiating those contracts all the time. So a lot of contract carriers, it seems like, are rejecting some of that freight, or the rejections are increasing, hoping that they'll have better luck, or maybe seeing some loads that pay better on the spot market. This is what it feels like to me. You guys tell me your opinion. But as for tender rejections, we can see that the West Coast died. There are portions of the plain states that have increased rejections, some of the South, some of the Midwest, and some of the East Coast, right? So much better map than for the reefer. So let's take a look now at the spot market. All right, again, DAT map showing the prior business day. Red means that there are more loads than there are trucks, good market. Blue means the opposite. We can see that for the most part, especially in the plain states, regardless of the fact that tender rejections increase there, for the most part, the plain states are pretty bad. There are way more trucks than there are loads. California is okay, Dallas is okay, Memphis, Atlanta, Charlotte, North Carolina, and maybe some portions of Pennsylvania and Indiana. These are the places that are translating to the spot market right now. But let's take a look at where you have to go if you are a dry van operator next week. So we are trying to match two things. We're trying to get an area that's dark blue with as much volume as possible. So we saw that the plain states like Nebraska, Kansas, everything, they are blue on the spot market, which means that there's still overcapacity. Even though there are tender rejections there, look at that volume. There's nothing there. So the tender rejections are pushing the already minimal volume to the spot market. And we can't forget about people deadheading either. All right, but in general, where do you need to go? It looks like Southern California, it's blue and has a lot of volume. Let's see, we have Houston, Texas, and Dallas, Texas, manageable. We have Atlanta, Georgia, where volume is always high, but it seems like there are more tender rejections, which is good. And then we have this area, which encompasses Arkansas, Mississippi, Tennessee, it looks like, and maybe portions of Kentucky as well, which is dark blue and has the volume there. So to be quite honest, if I was currently working with a dry van, I'd keep my dry van from Southern California to Texas, maybe sometimes hitting some southern states. Yeah, that's pretty much it. Atlanta, Georgia, I don't trust, because Atlanta, Georgia always has high volume, but yeah, those tender rejections, they did increase, which is nice. The question is by how much? Let's take a look. The highest tender rejections are at almost 12%. Okay, it's not bad. And the highest tender rejections are currently right here in Nebraska, Wisconsin. Wisconsin, the thing is, it has had high tender rejections for a while now, but the volume I can see is dwindling away. So there's not going to be as much to choose on the load board. So there are weeks where I have a hard time doing videos. If you guys have been watching or with me for some time, you know that I hate being the bearer of bad news. So this particular video, I had a really hard time forcing myself to make it, because clearly we're getting attacked from every single side. Rates are down, volumes are crashing for some equipment types, even though they increased from July 4th, but still they are crashing. Diesel prices are up, capacity is barely decreasing, yikes. What is more surprising though is the fact that more and more articles are starting to come out about the freight market and the trucking industry saying that yay, we have finally kind of turned a corner here. Do you guys feel it? I sure don't. Coyote just released an update saying that finally spot rates are going to be climbing up slowly while contract rates are deteriorating. Now, I'm going to quote this from Coyote. With the final Q2 truckload market numbers in, we can finally make a bold statement. Rate deflation has bottomed out and the Coyote curve is sloping upward once again. For carriers, this does not necessarily mean your rates will improve dramatically tomorrow, but it does mean you should see some relief on the spot market in the coming quarters. Now, I love getting articles like this, but the thing is, I'm not going to say that they're completely wrong, but I can tell you that I am definitely not seeing this actually materialize. There's not even a hint of it at the moment. But again, hope dies last, and I will continue always hoping for the best, but preparing for the worst. Anyway, guys, thank you so much for joining me today. I hope that you learned something that you could use for your operations. Wishing you guys an amazing rest of your week, a great weekend, and I'll see some of you in the live Q&A this Sunday. See you guys then.